Okay, good day, everybody. Good Friday to you guys. Can you all see the screen, by the way? There's one candle at entry patterns. If can you just update so I can ensure everybody can see? Okay, thanks for the confirmation. Thank you, thank you, thank you. So today I'll be discussing about the entries that we had from the report from the 17th right up to the 28th of October. Okay. So as usual, if you guys have any questions, please you just type it inside here, and then I will address those questions when I'm done with the presentation. Okay, so without further ado, let's dive in and look into the entries as per report. Now, the very first one is the 17th of October 2022. This is the US oil, right? So I've talked about the area that we wanted to look at, and we were looking at this area right here where we were looking for the buys. And as you can see, this particular candle over here, right, it was quite a huge candle, and the size of it actually covers quite a big chunk of the rest, right? And then what happened next was that we had the opening price right here, and it pushed up, and immediately after pushing up, what you saw was that prices kind of like stuck. They can't even break this swing high right over here. Break as in close above. Sorry, I think the correct word to use would be to close above the swing high there. Now, failure for this, and you can see this is also equally a very sharp reversal. Let me just change the color and just show you. This is a very strong push up, and this is equally a strong push down. That has already in a way give you some signs that something is not right. So we didn't start off the week in a nice way. This was a losing trade, hence you can't see much of result. But I want you to focus. It's nothing wrong. There's nothing wrong totally trading this one, but from a perspective of the angles that you can see, equally strong push up, equally strong push down, and then price starts correcting. After the pushing down starts correcting, so obviously it can just come and push down here anytime. Okay, so that was what happened, and then we start off this report with a losing trade, but it's fine. I mean, the trading, that's part of trading. You win, you lose, but most important think that you win 70% of the time. That's at least the basic standard for a profitable trader. Not even 50-50, but I think 70% accuracy should be a target that everyone should go and achieve. Okay. Next is we had the continuous buy in the oil too. That was the next day after price came down. This was the entry, the very first entry that failed. As you can see, then it got stopped out, right? So this was the second entry again. Now, this was called at the same level at these areas, but this time was a bit different. Now, of course, it would have caused jitters. Now, if you look at this is a bullish engulfing pattern. It totally engulfed this guy, and what happened next was this. I know a lot of people would not be comfortable with this price action over here, because look at the rejection, and then look at the strength of this movement after that. So I wouldn't blame anyone if that, after this and then after that the price started moving up and stalling in this area, and you would have got out from the trade. Now, I wouldn't blame people who actually learn to protect their trades over there, putting the break even. So, but it's fine. But at the end of the day, it's not only about the candle, it's about the conviction that you have that this is the area that you want to look at, the area that you want to be trading, and that's from your conviction. You just let your trade be. But nevertheless, from the developments in the oil, right, I do have some updates for you guys, so stay tuned, because I will let you all know the updates at the end of this presentation about oil. So what we found out, and so I'm changing a bit some of the rules to the oil again. Okay, so stay tuned. At the end of the presentation, I will let you know. So like I said, I mean, if you were there doing this live trades, right, and you see this is something not right, that's this strong reversal coming back over here, and then they start pushing up again. So this at the end of the day looks more like a corrective structure, and it may push down, but there are times where it just blasts through that channel that we see, and that's the reason, and that's like the beginning of that push up from the tip of this channel right over here, right? So it's just something that you need to look at and really internalize. Now this kind of stuff, it comes with experience of watching the candles. After at least 2 years, you do develop that instinct that you know what's going to happen next. So one of the key telltale signs that this could possibly move higher, if you look nicely, this was the area. Look at the long legs. So it just imagine this thing is that price coming down, pushing up, coming down, pushing up. That means there are a lot of buyers here buying off the lows at these areas, This alone gives you an idea, said that, hey, maybe a lot of the bullish, the buyers are here. So look into this overall trade and see. And the most important thing is that, look, this is a swing low, right? It has broken up, down, up, broken. So the trend is continuous right over here. The trend's continuous, and they are not able to break this lower swing over here. And on top of that, they are showing all these rejections of lower prices. So that also gives you an idea that, hey, probably this trade, you may be able to get out with something. Okay, so that was a trade for the oil for 18th of October. Okay, now for the dollar candy, this I categorize as the high risk entry in it. Do you all know why? This is a quiz. Can anyone answer? Can anyone answer? I've talked about this in my last video. Yes, that's correct. Correct. Because look over here at the end of the day, at this particular area, it could not break this high, right? So it's not making actually a higher high than this high. That is not. This area here is a lower high. So that's why when it is near, both of them are near at the same place, then I would categorize this as a risk trade, because if it's a higher high, then it's a good thing, but it's a lower high, but it's around the same area. So this is what we consider a high risk entry. So we had one here first, right here, but it did not close below the opening price. So I wouldn't consider this as an engulfing pattern, but this, and then price started to in a way to show a slowdown momentum. Look at the size of these candles, and then now we had an engulfing candle closing lower than the opening price of the previous bullish candle, right? And price started pushing down. Now I understand that you would have it's kind of like a mini heart attack when you see prices pushing up all over again, but this trade over here, it did not take out the high. Your stop loss would be here. It did not take out, and from here onwards, price pushed down all the way to about 136. Okay, so this is another one. And those that if you absolutely believe that this is the place that you want to take the trade, this is another area that you can actually do your entries. That means your entry would be right over here. Now, like I said, if they are it's not a fresh new high, it's a lower high, this is what I call high risk entries. This carries a bit more risk, but no one thing is that this here, right over here, these are all in the same areas. And one more thing, furthermore, if you look at this price, this is quite a strong push down, correct? Very strong push down. Now what you see here, it's quite a messy structure moving upwards. So that also tells you that this is a corrective structure, and the corrective structure, once it's done, this is the direction that it would be pushing. So that gives you an idea. This is fast, this is slow, and then it's just doing a lot of zigzags up and down. Okay, so that's the way for you to differentiate what is a impulsive move. This over here is an impulsive move, and this is a corrective move. So whenever you see in my report, I said that, okay, look over here, wait for the corrective move to come. So what you need to do is just look for messy price structures like this. Let them start go up, go down, go up, go down in a slow manner. And then you see this whole thing, hey, it's not as clean as this. That means this is messy. This is a corrective structure. So when it comes to our areas and you see a corrective structure, that is where you will attempt your entries. Okay, so this was one trade for the dollar candy, right? So let's look at the next one then. Now, this is the dollar candy also on the 21st of October. We were looking at the 138 area, 3860 area, sorry, 3860 area, and that spike here came to our 3860 area, that zone. So this one, I think there is just no argument into it. You know, there's no speculation, no nothing. This is just pure, simple bearish engulfing pattern. And what is good about this particular pattern is that number one, it has a very long wick. See that this long wick, it shows rejection, and that's what we want. And also leading towards this high price, you look, we had a lot of volatility, and then volatility started to dry up in this area. It pushed up a bit, but still drying. And look at the sellers that is coming in. This from this top right here to here. This is a lot, it's a big movement. This is like the biggest sellers in a long time, right? So what happened next is that I'm not surprised that you see this is quite a heavy push down from 137, probably 90 area, and it didn't stop until 135.90. So that is like a 200 pip drop from the top, your entry right about here, and then dropping to this low. So these are what we say convicted sellers. And what's happening next? Look at the momentum. This is a sharp drop. Then it started sharp, yeah, and then price starts move sideways, upwards, sideways, down, sideways. So this is another messy structure, right? That's forming over here. That's so from here, that was the next move down for the sells. Okay, so if you put your Fibonacci over here, that this area probably will be the 50% mark also. So you have the sell areas, you know, price rejecting, and then rejecting at a fib area. Now, earlier on, you saw this, right? Let me show you this, jog your memory again in the oil, where you saw a lot of these long leggeds, right? And then what happened next? It goes up. Now, look at this particular one right over here. You have the actual opposite, where you have more legs rejecting at the higher prices, right? Look, even this one there, right? And you can see even the very first one itself, I'm going to draw the first one itself. None of the prices that you have over here was able to close above this one at all. Let it be this one. So that also tells us that, hey, you know, be on the lookout, and probably these are the areas I will be looking for sellers, because buyers are non-present. Of course, in the report, this kind of statements do help, whereby I said that, you know, I expect the dollar candy to hit 134, and at this point of time you are at 137.345. This because we have already done all this heavy lifting for you. We see that area probably will be tapped, right? You'll be going towards that area. So of course, it gives you that extra confidence to actually trade towards this direction. Look for the sells, because I've already given you what to look at. Okay, cool. Right. So let's move to the next trade. Now, this is the Swiss trade, right? So Swiss trade, same thing. Look at the size. Okay, small size, big size. Now, one thing I need you to look at over here. Now, you have a long leg up. You also have a leg down. Is that scary? Yes, it's for beginners. So what you need to do right over here is that to look into detail. This is the top, this is the bottom, right? So I want to know one thing. Did this price close below the 50% of this whole range over here now. So I give, this is a rough estimation, yeah, 50% probably will be over here. That means this guy closed below 50%, did an engulfing pattern. Of course, it qualifies as an engulfing candle. Okay, so this is what you see when you have confusion. Unless you have something like this, a very small body, this is called a high wave candle, regardless of color. Okay, this may be a white color candle, it may be a black color candle. We call this a high wave candle, regardless of color. It means confusion. Nobody knows what is the right direction. The market is confused. So when the market is confused, usually it's also a negative sign. But it's better for the market to show hand, move towards the direction that you let them move towards that direction. Usually it's like breaking this lows or breaking this highs, then it's clearer. So, and if not only break, it's able to close below or above those areas, then it's a good thing, right? So what you can see after that is that price push down, right? With this price push down. Now, the next thing is that what happens next is that look at the price action. After pushing down strongly, what did it do? It did a slow and corrective move sideways. This already gives you that feeling that, hey, the market, there are not many buyers over here, and the buyers are not really convicted enough to do more buy trades, and this looks very weak hand right over here. So of course, it's no surprise later on you see the sellers resume their selling right after this. Same kind of pattern here and here, so that continued that move down. Okay, so now you have a better idea. So that this was the engulfing pattern that we were looking for. Now you have Bitcoin. Bitcoin on 21st of October, I mentioned that the bias disappeared after going near 20,000. Now, that's something that is not a good sign, but nevertheless, these are the areas, 18,800 and then 18,600. I gave these two levels right over here, and I said that if we don't see bias between this area, then Bitcoin is going to revisit the lows all once again. So what happened over here, coming to this 18,600 level, you can see suddenly there is a conviction. A lot of buyers are buying up from the 18,600 level here. And on top of that, not only stopping in the first hour, in the second hour itself, it pushed much higher right over here and engulfed like 1, 2, 3, 4, 5 candles totally. So this is quite a strong indication that where it wants to go next. And then before you start worrying and saying that, hey, is this thing turning into something? Is it going to reverse? Just look at how the candles move after that. Sideways, push up, sideways, push up. So that doesn't show that there are a lot of sellers over there. So it's fine, right? Okay, so that's one that you can look at. Oh, okay, so let me clear this. Okay, next one, the Binance right over here. BNB, it came to our level, our 265.5 for bullish price section right over here. So so what we have this 265.5, and what happens next is that price pushed up from here. It seemed like the Bitcoin with the long-legged push. This is one of the bullish candles you can see inside here. That's one, and then after that you have a big equal candle moving up this side. So this is one of the most I would say, a very strong bullish indication, and it happened at our level, another part of it. So this was another one that you saw a bit, the Binance from the level of 265.50 traveling all the way to the 290 level. So that is really one more nice move that we had for this on the 21st of October, right? Then we have net gas. I remember it was so funny that that time we were having the Zoom, right? And then I said, okay, net gas already hit our level, our $5 level, and then we have an engulfing pattern. Should we do? And then the people were just asking us, should we enter? Should we enter? So what's your call? Did you enter? Okay, so that you can see that this trade finally made a 2-to-1 return. And I still remember very well in the report, I said the moment it breaks this high over here, you can start taking your profits right over there, right? So I did say that, and if you have done that, you would have made roughly a 2-to-1 return. Okay, so if you can see, this was a push up, and that push down wasn't really that smooth, right? So that is another indication, that possible indication that they say, hey, this thing could really move much higher, and just take this trade right from there, and then we will see. Okay, so this is another engulfing pattern, and if it happens to be at our place of interest, that's another good engulfing pattern. And from here, then you can see that the price just jumped up, broke this high, and that's how the natural gas moved much higher, and then we profited from this trade, right? Okay, so and then Binance. Now guys, I have to tell you, Binance is really one of the trades that we, like, I think we I don't really have memories of Binance losing a lot. I think so far in the last 2 months, Binance, we only lost once or twice maximum in it, and the rest of the times they were just moving according to our places. And this is one of those rare times they just only move a 1-to-1. Okay, this was one of those rare times. Now, if you measure this was just below the 50%. So this is what I was talking about, this high, and the close was just below the 50%. I think the 50% mark was something like that. So we, for here to be transparent, as long as it close below the 50% mark, even by just 1 point, it will still count. Okay. But obviously, by doing that, it also tells you, hey, probably this is rather weak. This movement is rather weak, and then yeah, it may not work, because on top of that, you have these two particular rejections, at there. But of course, you can say that this rejection is happening at the end of the market hours, and these are usual times where the market is not active. Everybody is resting. Okay, it's probably resting already. So so this is one thing that you can have a look at. And most important, look at this area over here. It's a very strong push up from right over here. And when you have such strong pushing up, traveling from 270 right up to 289, and from this level, look at this, the way it's rejecting, is taking its time. So that also tells us that, probably we have to be careful with this sell. Doesn't mean that we can't make money, but we just have to be careful. So price rejected 290 area, and then this is what we were looking for to sell at the 290. So this one just only made a 1-to-1 return. Yeah, so just give me a second. Yeah. Okay, so the next one, that's the gold. Now gold at the 1675 area, 1695 area, I told you guys to look for the. Okay, so recording started again. Okay, so where was I? Okay, in this particular one, what happened here is that those were the sells. It came down, and then it started pushing up again, right? So after started pushing up, what did it do? Look over here. Okay, look over here. Now, these are the signs, you know, sometimes where it does messy moves, right? Messy moves like this is going sideways. It didn't really push down. This also gives you that idea what kind of price actions are the buyers there. So because of these rejections, right, you probably could have held on a bit longer to these trades. The same thing happened right over here, right? So these are the signs. Now, in the beginning, you may feel that you don't want to oversee this thing. It's fine. And it's always good to learn how to take profits, because profits, once you take profit, it's called profit and it's inside there, because all these are, I have to admit that all these are hindsight. But if they do happen while you're in trade, this will help in your decision making. There are a lot of rejections from this area, then they are not tiny rejections. They are pretty good rejections. Look at over here, the size. They are all closing way below the 50% mark of the whole candles, right? Way below the 50% mark. So that in a way already tells you that, say, hey, I just have to be a bit vigilant over here. Probably the sales will continue. And only if, like, say, you are making already considerable profits already, right? And you want to take some risk with these trades, then you do it. If not, by all means, the moment you have here, you know, 121, 221, just take it out. It's fine. It's fine. How would you know that this thing from this point won't actually go up? Because it looks like a corrective structure to really go up. It's just halfway through, it went down, right? So you wouldn't know. I wouldn't know, right? So this is one way, but what I want to do to achieve here is not only show you the candle entries, but to explain to you the emotions of the candles, the emotions. So once you understand these emotions, you understand price action, you will understand what really is happening over here. The tug of war between the bulls and the bears, who is winning, what the hints like, okay? Now, okay, cool. You know that's cool. Let's move on to the next one. The next one will be the candy, the dollar candy. So over here on the 26th of October, basically we were looking for the bullish price action, right? Bullish price action at 35.30 zone. So this is the 35.30 zone. Now the first trade right over here, let me show you this particular trade over here. This is a losing trade. This is a very nice. I admit that this is a very nice bullish engulfing pattern, but there it can also fail. Doesn't mean you see bullish engulfing it will go up, right? But the probability is that you win most of the time. So this is another losing trade that we had. Okay, so price went up and came down and took out the lows right over here. Okay, never mind, it's fine. It's normal, because at the very next trade here you had this engulfing pattern. Look, this one made a newer low, right? This low broke this low, made a newer low. And what happened next was that we had this is a morning star. So this one gave you a 1-to-1 right over here easily. Gave you, actually is a 1-to-1.5. And then after that, price came down again. So this would have caused you some jitters, correction, push up, a strong push down, taking out all the lows once again. Okay, so this is one of those times where, you know, you tried your best, but the most you can get is 1-to-1. It's fine, but at least you know, probably you were able to if you have just taken everything at 1-to-1, you would have covered this trade also as well. Yeah, but if you didn't, you employ the money management that we recommend, so at least you have recuperated some of the losses. Well, it's fine. It's also a good thing. Okay. So the next trade we had was also on the 26th. This was a sell trade for the Aussie dollar. And what happened was that this we had an engulfing pattern right over here covering it. It was quite good. Okay. The only part where maybe the candle size wasn't that big enough, but to be, I would have still taken this trade. But the telltale sign was that it wasn't even able to give you that your 1-to-1 that you were looking for. And instead it went into a corrective price action. Now, this was all the danger signs that, you know, so this trade might not just go your way. So it wasn't a surprise that the high, the stop loss was taken out after that. Okay. So that's another losing trade right over there. But fret not, as long as our focus is in our area. We were looking at the 65 area to sell, right? 65 area to sell. This was a good evening star, and this evening star really started pushing the price down right over here. Now there was some cause of concern when prices started pushing up, but look at this thing. So what does that give you? That's that sign giving you said, hey, be careful. Not be careful, as like, hey, your sell might actually succeed. Look, it can't even close above all this right over here. So that alone is a very good sign. So you can't even close above this highs right over here. Rejection, and price started coming down, try to push up again, and then just flatline and start pushing down again. So that's another good thing that we can see from here. So we lost here, and this is more than enough to cover whatever losses here and make even more. Okay, so that was the dollar candy, right? So just hold on, I marked it. Okay, so that was the dollar candy, and the next one was the S&P 500, the 27th of October. Okay, oh, not S&P, my mistake. This is the Aussie dollar. Okay, so this was another same, I think. Yeah. Okay, so this one, sorry, I just pressed the wrong one. No wonder I was looking at the wrong thing. So this is the S&P 500 right over here. We were looking for different level first. This was the first level that it gave us the bearish engulfing pattern, and then if I'm not wrong, this trade here gave us 3-1, and the second trade at the higher level that I gave you all, that was the one. I think it's the 39.10 level. That was the one that gave you right now, I think, the 7-1. But if you have just taken this 3-1 and the next one at the 7-1, you had a 10 bagger right there in this S&P alone, right? So it took us some time for the S&P 500 to actually come to this level. I still remember we waited quite some time, but only those that are patient, they are rewarded, right? So here is a very strong engulfing pattern. It's much bigger than the previous one. So this is what I consider a strong engulfing pattern. Not only covers the opening price, even covers the low price right over here. So we had price move down, slow corrective movement coming down again, creating the spikes right over here, and it's dropped off from there. Okay. So that was the S&P 500. And not only that, we also had the NASDAQ reacting to a level of 500. That was also on the 26th of October. Now, if you can see the size of this candle, not only dwarf, it's about equal to this size. So that's a good telling us that the sellers, they are equally big enough there. So I like it. So now with that down corrective movement, very slow, it's not pushing up as down, and then you have this sellers, buyers pushing up and coming down with this long legged. So it's telling us the more still very much in a down until it came here the other way, spike from the lower place, and that's how it formed that low and started pushing up next. Okay, NASDAQ. Next, you have the US dollar. So we were looking at the 109.40 level. This is the 109.40 level. The early morning, right over here, I think nobody catches this trade. Yeah, it's just too early. So later on, later in the day, the late morning, we had a lower low, so that thing, and the next we had a very strong buy pattern, right, candle right over here. And not only, why do I consider this strong? Red is in quite some time. So not only that, we had two long spikes over here. That is more less giving you that indication that, hey, this is a place that you can actually look for the buys and buyers were pushing up. Now I want to highlight this place. If you look nicely, this is what we call a very confused state of price, right? So price is pushing up, is pushing down, and is staying right in the center. So what you need to do, wait for the price to close above the high, which it did, and then it consolidates for a short while and then it started moving up again. Okay, so whenever you have this, relax a bit and then just be patient, see where it goes. Most important thing is the closing price. I want to see that. Okay, so that's how the dollar index started recovering and started pushing up to even, I think, even higher than where we are right. No, much higher than where we are right now is definitely much higher already. So that's a good dollar index buy. So, and then we had the moving into the cryptos. And was practically waiting for this 13 value for quite some time, the atom, right? Not Atmos, but atom. So at that 13 level, we had this engulfing pattern right over here. Fortunately, it didn't make much. I think nearly two. I was nearly two. And after that, it started removing up again. So it's still okay. That's not okay. So yeah, those basically were all the trades that we covered until the end of October. And what I want to highlight to you all now is that remember, I do give buy and sell zones, right? Plus minus 20. Now in the excuse me, in the last report, I've these levels, but I would like to update a bit for oil. Oil now is no more $2, but plus minus 20 cents. Okay, above, below the level that I give you all by 20 cents. Those would be the new levels that we will be using for oil going forward. Okay, so now I will look into the questions and see. Daryl, you have a UC over here. Can you guys, dollar Swiss, and then the dollar candy can also be UC. So please specify what is that. Okay, so just hold on for a short while. I need to bring up the charts for a short while. Just hold on, yeah. So just give me a second. Okay, so let me look at the question that you have over here for Australian dollar, Aussie dollar. Okay, Aussie dollar here. November the 3rd. Okay, November the 3rd at the 1600. Aussie dollar, 1600. Oh, 1600 hours, November 3rd. Let me put this thing. 1600 hours. Oh, this is the 1600 hours. Okay, now I see where you are. Right over here. Okay, so what's your question? It's 20 pips above. 20 pips above. Daryl, do you 1600 hours? That's this one, right? Yeah, okay. It's more than 20 pips above the trigger level and also did not create a lower low reference to candle on October 24th. October 24th. You mean, okay, I need to break this lower low, right? Okay, now, okay. Do we take this trade? Now, the most important thing, number one, is that as long it triggers within our zone, regardless whether it's going to break or not break, it triggers at our zone. I've given you 20 pips at plus minus 20 is within our zone, you can go for it. But in this particular one here, I know even they didn't make a low, it's a most important thing, did it make an engulfing pattern? If it did, then you go. So this is not what I call engulfing pattern right over here. Okay, first, number one, it needs to close. This is the high right here. This is the low right here. And it must close, number one, above 50% of the range. Number two is above this opening price of this bearish candle. It did not do that. So that's why it didn't. I wouldn't qualify this as an engulfing pattern. So I would not take it. Okay. So that answers your question. For dollar candy, now I'm going to move to dollar candy. Let me delete all the objects first. Return it to normal. Okay, so dollar candy, dollar candy. Okay, dollar candy. I have a trade open on November the 3rd at 1700 hours. That's November the 3rd here. Okay. Right. Okay, so at the level given, I close on November 3rd, trade open now. Sorry, yeah, for dollar candy, I have a trade open on November 13 at 1700 hours. Okay, this is where you open the trade. Then today, November 4th at 10, an engulfing appeared. Okay, sorry, I was looking at this one. An engulfing appeared today. I think you're referring to here, right? Okay. When you open a new buy trade, just hold on a second. I just want to know whether this place here is this our place of interest or not. That is the most important thing. So is this our place of interest to look for the buy? Just hold on. Let me bring up my report. Because I have sometimes, I can't recall so many levels, because that's why I always employ an alarm. And it comes to my level, it rings and say, it's come to my place, and that's where I will take the trade. So let me look at the dollar candy. Okay, so check out bullish price action at 36.50. Yes, it is at our place. And yeah, definitely, if it's at our place here, you can take the buys and then get stopped out. That's it, enough. So, but one thing I need you to highlight, that's why it's fine, because we would have recorded this as part of a loss too. But as you get better in trading, try not to catch trades, right, when prices are like this. You don't even see them resting. So many black candles, black all the way, and suddenly one white over here. This usually, I would categorize this as pretty high risk area. No doubt, yes, it came to our level and is stalling, right? I agree, it's stalling, because the levels that I give you all have a very high degree of price stalling in that area. Okay, so it's okay. Losing this trade is fine, but if you can see that if you have taken other trades, it's okay. I don't there's nothing wrong based on this. Yeah, it's for me, I would have taken this trade based on this candle pattern alone. But in terms of the way it was moving, I would be a bit apprehensive of this. So that's why now I'm not only teaching you guys about candle, I'm also slowly explaining price action. So remember, when you have multiple long, okay, you have long candles like this, long black candles. On top of that, one more thing, you see short, you have the short wicks. Okay, what do you mean by short wicks? You say these are called wicks. These things here, they are called wicks. Look at the wicks here, look at the wicks here, look at the wicks here, look at the wicks over here. So that's telling you one thing, is that this are real determined sellers over here, and it just came down. So I would actually take this trade. I won't take it immediately, but if it's one more black candle, and then you have like at least 3 candles 3 candles and above, then I might take the risk if it comes to my place. Okay, so I would actually do that. So yeah, this is something that I would do for here. So okay, yeah, okay, so I've answered all your questions already. So next question by Liyuan. Hi, Justin. After the level you mentioned is hit and we receive alert, okay, we need to check every hour to see if the triggered candle is in. Yes, correct. Every hour. So what usually you can do is that, okay, show you how to set an alarm, right? I've showed you before. Let's just do a fast one right over here. So let's say I want to sell it right over here. So you do a right click at this level on the sell, and then you just go trading, and then you put an alert, okay? An arrow will come out. Double click on that alert, and then you can actually make sure uncheck expiration, because there is an expiry date. I don't want it to expire. Maximum iterations, put it 1000. So if 1000 times it rings to remind you that you have reached your trading area and you don't listen, you still did not realize, then you are destined to lose, to miss this trade. Okay, and here at this level you can actually put in more accurate values. Okay, so you can just say, if I want it at 136, I'll put it at 136, and you can see this arrow changing to 136. So when it comes here, when it comes to this level, you would actually hear the sound. It goes ding, ding, ding to remind you. So you said, okay, it's come to your level. Then what you do next is that put on an internet alarm every like say for right now it's 9:48, right? And you said you want to know the closing candle at 10, the 11 o'clock one. So put an alarm probably, if you need some time, then take 15 minutes. 10:45, put the alarm there, and 45, you look at it, you will know. Like for example, we are at 9:48. What are the chances of this candle engulfing this candle right over here? Not very, very high, right? So if for me, if I see like that, I said probably I'll come back the next hour. Then I'll reset my alarm again to probably 10:45, and then I will come back again to see. Then that's the way that is not so stressful for you all. Okay, so a lot of people actually do that, and to be frank, I do that because we are monitoring so many pairs at the same time, so we have to have alarms. The only thing that I hope is that we don't have alarms all ringing at the same time, then that will be painful. Calculating everything all so fast. You have to be really fast, you know, to enter all those trades. Yeah. This trade did not enter our buy zone. Keeping, you were referring to which trade? I don't know, because I was just doing a quick glance one. This trade did not. Are you referring to the dollar candy trade that did not enter our buy zone? So later, I am not so sure. The keeping did that. No, I'm not so sure. Never mind. I wasn't sure. So because the chats are coming in, please, because I'm reading so many, I don't know which one is referring to which one. So if you're referring to it did not enter the buy zone, it's good to just say which one did not enter the buy zone. Then we will know. Yeah. Then I know which one to refer to. Hi Justin, question on euro dollar based on today's report. I guess it met the corrective move up at 97. 97.50, and okay, let's look at the, okay, so is, okay, what do you think of this thing here? Okay, this is the euro dollar, right? And I was looking at the 97.50. Let's mark the 97.50. Okay, drop to our area of 97.50. And then we are expecting a corrective move up. Okay, now at this particular point over here, it was still a corrective move. But one thing you need also to realize is that tonight is a FOMC. That's why FOMC it's among all the forex news, right? FOMC would be the most volatile one of the most volatile ones. And it can just swing up and swing down. So sometimes if do you have this habit if it comes to our level? No, I mean, if you have already have profited, you know, you want to protect your profits, probably you might want to skip the days that is FOMC. But anyway, because this report here not only caters to midterm traders, there are a lot of short-term traders that use our level. So that's why I have to give out every single level. So, but anyway, up to this point, right here, yes, you are right. It is a corrective thing up to this level, right over here. But in terms of whether there was any engulfing, then this was the engulfing right over here at the level. But if you look over here, what happened here, the high is at 97.95 already, right? 97.95, which means it has already surpassed our sell level. The maximum we can go is 97.70. This is 97.958. If look at you can look at the high here. Look at the high here. It says 97.958. It's already way surpassed. So when it has already surpassed our level, if it's surpassed by 1, 2 pips or 3 pips or let's say 5 pips, sometimes I will still take it. But if it's surpassed by like 10, more than 7 already, nah, I do not want it anymore. This has surpassed way too much. Okay, so there was no trigger over here. Okay, so I wouldn't have taken this trade, and you can see then I'll come to FOMC, the non-farm, sorry, not FOMC, non-farm numbers, and you can see the swings has already started. Went down. You see how dirty non-farm can be, yeah? Let me show you something like that. So I bet, right, a lot of people, swing traders, would have put a stop loss here, and you can see news out, down, take out this stop loss here, and now they're clearing the top. I won't be surprised then later they come down over here and that's done. You can actually do that. This is a pattern. Let me show you some patterns. It can start. They can do a lot of things. Okay. You know, this is a natural pattern that we can see in the non-farm day and the overall non-farm week. Let me show you again. Where it start up today, this is Monday, right? It goes up, it clears here, and then it clears the bottom, and then it goes back to where it almost started. It may not happen every single week, but most of the time, non-farms, they have this pattern. This is when I was working in the funds, they call this the butterfly pattern, because if you were to join the center, and then this looks like the wings of the butterfly, right? So you can't see the butterfly. Can, no problem. You see this? I put 2 eyes. Now you have the butterfly. So yeah, this is what we call the butterfly thing. So you can see this quite often in the during the non-farm times. This is just these market makers just clearing people off the market. But to address to your question, Mei Hui, there wasn't any trigger at that point. But if you're asking me at this particular area, was the price corrective? Right over here, the answer is yes. Yeah. So if it has triggered within our area, that was, let's say, nothing, I don't know, I still want to trade this thing, yes, I would have taken this trade and it would be down. And you are right, because I was targeting that 96. But because it was way beyond, then no. Because the levels that I give you all, you must always remember one thing is that they are really very sensitive, you know, to that point where I give you is based on calculations. And after I've already calculated that area, it shouldn't go beyond. If it goes beyond, something is not right. The momentum has overshot that particular thing. So don't always remember that. Yeah. Okay. Yeah. Aussie dollar 3rd November for, okay, let's go back to the Aussie. 3rd November. Okay, 3rd November 4. Okay, so this is the thing. Okay, so look into this. What are we looking at for the Aussie? Let's see. Aussie dollar, we were looking at the this is the 63 area. Can you guys help jog my memory? Because we are looking Aussie dollar, we were looking at the price, bullish price section at 62.50. Was there anything else a bit different? Just give me a second. I need to look at what I wrote, 63.20. So basically this is an area, the low 63.20. Yes, correct. Yeah. Okay, so let's highlight. So this is a valid trade, right? Coming to this area right over here. So looking at this, okay, let's look at the overall. Yeah, this is a corrective one and then it's trying to push up. Okay, so I understand that part of it, and this would be your entry, and then yeah, 1 to 1.6. Now one thing I need you to realize is that yes, it came to our level over here. It came to our level, but how did it come to our level again? It came via a very, very strong FOMC statement saying that there will be a continuous rate hike, although it may not be that big, but there will be a continued rate hike. And number two, that statement also said that the new terminal rate will be extended for the Fed. Okay, previously they were saying at 4.5% and moving to 5%, and now they're talking about probably pushing up even up to 5.5%. So this can represent very very bullish news for the US dollars. And what, again, the same explanation what I want to have here is that the candles, black candles, black candles, black candles with very, very tiny kind of thing. So I would even though it's like pushing up and it really gave you a 1-to-1, right? For it to like just come up way about here, it's not that easy after this push down. You know, sometimes yes, you can, but it may not happen. So learn. That's why I said the moment one of those things, it just go back to the one. I think the first video, second video I created, right? After you hit your 1-to-1 in situations like that, what should you do? You know, try to learn how to protect your trades if you're going, especially when you have such a strong anti-sell over here. Learn how to protect your trades the moment you have 1-to-1. That can help, but of course that will also come after experience looking into it. So yeah, so if it comes, okay, if we have something like that, you see, it's taking its time coming down, and it takes its time and it's coming down again, then over here I don't mind taking it. Something same like here, but only if it comes to our area. If it's not our area, no, I would not really want to entertain. If it's prices is like slowing down, something like this thing happening right over here, yeah, that will be okay. But here is a bit too early. But of course, there were smaller candles started forming 1, 2, 3, 4. That's why it's already helped cushion this movement over here, cushion this sell momentum, and then that's why it still could be, it was able to give you that your 1 to 1.6 before it reversed. Okay. Yeah, so the dollar index is projected to go up. So other currencies like euro dollar, New Zealand dollar should be going down. Do we trade all this? Assuming we are wrong, it will be losing trade for yes, of course. You are absolutely right. So what you can always do if you are not confident is that if you are trading like the euro dollar and the New Zealand dollar, if you're wrong, both will be wrong, right? But there's nothing wrong to split 0.5% on New Zealand dollar, 0.5% risk, assuming your total risk is 1%, right? So 0.5% on the euro dollar, you 0.5% on the New Zealand dollar, and take both. What's wrong? We can do that. It's not, there's nothing wrong, because it's still one is Europe, one is Oceania. Unless you are taking something like Aussie dollar, and then New Zealand dollar. This is totally different, because when you're doing Aussie dollar and New Zealand dollar, it is really almost identical. The euro is because it's Europe, New Zealand is Oceania. So that part you can see that number one, different continents. But I'll teach you one trick. If you're comparing euro dollar and New Zealand dollar, right? So what you want to do is that you just go to this area, right? That's my okay. Let's say this is a very good question. I like your question. Okay, let's go new charts over here. Now we are looking at the euro dollar and then the New Zealand dollar. Euro dollar, New Zealand dollar, where are you? Okay, there we are. Now, can you all tell me which currency is stronger? The euro or the New Zealand right now? Can you all just type? Tell me. Who is stronger? Yes, correct, Daryl. You're absolutely right. New Zealand is stronger, right? So if in the event that you know New Zealand is stronger, and then there is a setup for euro dollar, and then you have the New Zealand dollar, I would choose the euro dollar because it is weaker compared to New Zealand, right? So if I have to choose only one, I would choose the euro dollar. I would not even think about New Zealand dollar because there's strength over there. So then the euro dollar probably will give me a faster will hit my target much earlier. So use this concept, then you will understand which one to choose already. Okay, I hope this explanation helps you, Leah. Okay, so yeah, guys, this is really cool. You are all asking questions, and I can see that from the way you're asking these questions, you're really putting effort in your trading already. So it's good as I see you guys, do report to me your progress. Send it to us, text us the messages, email to us, let us know. And then once I see you okay, then I can introduce different kind of trading understanding so that you can slowly improve. And the moment you see my report, you will know, okay, what to do next, how to play this game, and then that's to ensure that you have a really fruitful trading career. So since there are no more questions with that, I would like to end today's sharing, and I hope everybody have a wonderful weekend, and talk to you all on Monday. Okay, have a very good night. Thank you, everybody, for your wonderful messages. Yeah. Wish you all the best. Talk to you all soon. Bye.